Breaking. Cultivated meat company SCiFi Foods closes up shop, appoints firm to run sales process. June 10th, 2024, Elaine Watson. San Leandro-based cultivated meat startup SCiFi Foods has closed shop, AgFunderNews has learned. Given challenges in the fundraising market, we've appointed an advisory firm to run a sales process, said co-founder and CEO Joshua March. Given the nature of the process, I can't really say much more beyond this, added March, who has raised about $40 million to date from investors including British rock band Coldplay, Andreessen Horowitz, Valor Siren Ventures, Box Group, Entree Capital, and Prelude Ventures. Founded as Artemis Foods in 2019 by March and Dr. Jessica Krieger, who left the following year, and with Dr. Kasia Gora joining in 2020 as co-founder and CTO, the startup rebranded to SCiFi Foods in 2022. The firm opened a pilot plant late last year growing beef cell lines and serum-free media and single-cell suspension in a 500-liter bioreactor in what it claimed was an industry first. A pragmatic approach? While cranking out 100% cell-cultured filet mignon steaks is not going to be commercially viable anytime soon, March has argued that using cultivated cell biomass as an ingredient in plant-based burgers and sausages at an inclusion rates of 10% is commercially viable with existing technology. Speaking to AgFunderNews last year, he said, "You can make a blended product commercially viable at an affordable price at relative scale using existing technology without needing crazy scale bioreactors. I think you need genetic engineering and synthetic biology to get to that point, but still it's viable." He added, "We're taking satellite cells from cow muscle and we're using the power of synthetic biology, CRISPR gene editing techniques to immortalize those cells and to get those cells growing in single cell suspension and to make sure they have all the performance characteristics necessary so we can scale them. The cells are partially differentiated and should be seen as an ingredient," he said. "We're not trying to create tissue." Crunch time for cultivated meat. The last 18 months have been challenging to say the least for cultivated meat as seafood companies Finless Foods made big cutbacks to conserve cash. New Age Eats shut up shop after running out of funds. Good Meat was sued by its bioreactor supplier over alleged unpaid bills, and O-Meat is now operating with a skeleton crew following a turbulent few months during which the founder stepped down as CEO. Meanwhile, AgFunder data show a dramatic decline in funding in the segment in 2023, with funding for cultivated meat startups peaking at $989 million in 2021, dipping slightly to $807 million in 2022, bolstered by a $400 million round into Upside Foods, and then dropping sharply in 2023, minus 70% to $177 million, against the backdrop of a 50% drop in agri-food tech investing overall last year. While the funding runs were far smaller in 2023 versus 2022, investors placed a sizable bet on Uncommon, a UK-based startup formerly Higher Stakes, which netted a $30 million Series A round led by Balderton Capital and Lower Carbon Capital to scale production of cultivated pork using patent-pending technology it claims gives it a competitive edge by speeding up the cell differentiation process. Meatable, a Dutch startup that raised $47 million in its Series A in the heady days of 2021, raised a more modest $35 million in its Series B round last year, while cultivated seafood startup Blue Nalu netted $33.5 million to scale up production at its pilot facility in San Diego. Investigating cultivated meat, there's just a general risk aversion. In a panel session on investing in cultivated meat at the Cell Ag Innovation Day at Tufts University in January, Harris Comishane, general partner at agri-food tech investor Meek Cove Capital, noted that current funding environment for cellular ag is not favorable. The IPO market has been locked up and there's just a general risk aversion among companies, among VCs to invest money. The good news is that these are largely cyclical issues, but at the sector level there are other issues. There is a proliferation of companies doing the same or similar things, and many of these companies probably would not have gotten funded if funding wasn't so available when interest rates were near zero. So there's clearly going to be a shakeout from that, although this is also a cyclical thing that will pass. He added, "There's also a lot of challenges about scalability and getting to cost parity, which seems to be taking a lot longer than the VC world was hoping and expecting. There's also an underdeveloped ecosystem, so a lot of the earliest startups in this space had to basically do everything soup to nuts because there was nobody to outsource things to." End of article. So, in summary from this article, we can see that British rock band Coldplay, Andreessen Horowitz, Valor Siren Ventures, Box Group, Entree Capital, and Prelude Ventures. And then we see with higher stakes, so Balderton Capital and Lower Carbon Capital. Uncommon was the investment. And then now we see an interview with Meek Cove Capital. So a large list here of investors who are investing into cultivated meat. But in this example, the company has raised, SCiFi Foods has raised over $40 million but they are now closing up shop. Um, seems for good. So I think the article does a very good job of explaining um, the funding cycles, the IPO window that's not moving and not quite opening. And the one thing the article does not necessarily address, though, is the um, current revenue or current sales for the company. Because if they did have a foothold with their meats, then they might have a path forward. But that isn't addressed here. So it seems that, yeah, given the challenge in the fundraising market, we've appointed an advisory firm to run a sales process. So it doesn't really address um, what's going on internally when it comes to sales and revenue. Um, so that just might be another point in the article, is that it says that it seems that there's a lot of competition. So yeah, it says that from according to Harris Comishane, investor of Meat Cove Capital, it was quoted saying there's a proliferation of companies doing the same or similar things, and many of these companies probably would not have gotten funded if funding wasn't so available when interest rates were near zero. Back in January at the Tufts University Cell Egg Innovation Day, quoting that. So I agree with that sentiment. But some of these, especially when companies are being wrapped up, they don't really want to disclose just how under impressive the numbers might have been, or even address the general go-to-market strategy, or where things didn't sort of trans transpire as they had wished. So yeah, of course, for maybe perhaps legal reasons, they didn't elaborate, but would always be good to understand what was the gap that they could not bridge when it comes to production and sales and revenue generation. But overall, very interesting article and good to understand, for the most part, what went wrong.